Hi, this is Charlie giving you Monday's market commentary. I hope you're all very well. What I'm going to start off with here is I'm going to do a run through of what happened at the trade-off at the Forex show on Friday, because I was involved in this um, trade-off against Tom Hugard, and so fortunate to win. I was fortunate to win the trade-off on Friday. So I've had a lot of people coming through who, because it was put up on, some put it up onto Facebook. So a lot of people come through saying, "Oh, how did you do it? What happened? What did you do? What did Tom do? Can you actually run through it with us?" So I thought, yeah, okay, I can quickly do that on a Monday update. So here goes. So it was a really fascinating trade-off because we both had such different styles. Tom probably did, I don't know, 10 to 15 trades and lost money as a result. And I did just one trade over the 90 minutes. Now, like I often say, it's not about how much you trade, it's about making sure that you get the right trade. But like I said, it's completely different styles. But I will go through a couple of things of what Tom did, because I do think they're really quite important. So I'll go through those in a second. But to start off with, this is what I looked at when on the euro dollar here. When Tom and I both logged in, it was just 1:30. Just getting set up. My e-signal charts weren't working; they just wouldn't work on the bandwidth that we had, and so all I had was telecharts here that you're seeing now, and so I didn't have all of my momentum indicators available to me. So, but bear in mind, I'd looked at the charts before I'd left. On Friday morning, so about 6 a.m. I had a quick look through all the charts, so I knew overall where everything was overall. Obviously, I hadn't seen the markets all day until 1:30 on Friday, but I'd seen them before I left at, like I say, about 6:30 a.m. So I had an idea at the back of my mind, obviously the overall trends and everything else. So anyway, I've looked at the markets here on the euro dollar, and as you can see, it's just been chopping around. However, that was in quite a narrow range. And as we know, and again, I would beg to differ with Tom here, because he was saying, well, it's in a narrow range, so it's probably going to stay in that narrow range. Whereas we will look at that and say, well, actually, it's been a narrow range all day, so it's likely to have a bit of a breakout in one direction or another. So then it was just a case of me looking at, well, which direction would I rather trade this in? So this is a 5-minute chart. And so what I did is I just waited, and for some of you guys who have got our finer points discs, you'll know what I did in this zone down here. You'll know what I did. So so I initiated the trade down there. Now we had rules, so I could only trade up to, well, it was £25 a pip, which is roughly 4 lots or 400,000 on my account, 400,000 Forex lot size. So. So I went in with 2 lots over here, around about 137.10, I think it was, because I wanted to see if the market was going to show its hand. And what I was looking at here was these highs here. And if we broke those highs, then I was going to be looking for a dip to then add to that to then take me up to my maximum, which is 4 lots. So and that's what happened. I had to wait for a long time, as we can see, and then gradually, there it was. So we poked up here. And then on this down bar here, where a lot of people, I think Tom even shorted on that, took 2 pips or whatever he took. But on this bar, this was my perfect scenario to then get long again and to add to my position. Bear in mind, my stop was only at 137.03, so I had a 7 pip stop loss. And so added to my position here, where a lot of traders would be getting scared, saying, "Oh, that's a bearish engulfing candle and everything else." But yeah, but it's only a 5-minute chart. You get the candles are weaker on a 5-minute chart than they might be on another one, other time frames. So this to me was a flush out to suck a load of people in after we'd just broken up above these levels, suck a load of people bears in, and scare maybe anyone who was long. So I used that as an opportunity to then get those extra 2 units in, and then just rode it out. And then I took some profits up here when we hit 137.20, because that was a resistance zone, and then a bit more once we got into the mid-20s, and then I came out on this bar, right at the top of this bar. It was a nice expanding bar, so to speak, a nice high range bar, and so I thought, oh, that'll do. And so I had a decent enough little trade there, and it took most of the time. I think this was about 10 minutes or so to go, and it took all of that time because my initial entry was down here, so I just rode the one trade. Would I have taken more trades if this first trade hadn't have worked out? Yeah, I would have done, but but I didn't need to. And I think this is the important thing. You don't need to. It's the same as when you're trading at home. If you make your daily target, you have to ask yourself, do I need to actually trade again? So it was the same sort of thing. I didn't need to. Yes, it was a competition, but at the same time, to me, it's about demonstrating how I trade. And so how I trade is saying, okay, well, if I'm in a good trade, I'll run that trade, and that'll be it until the next quality setup comes along. And obviously, by the time I come out of this, there was only 10 minutes to go, so I just sat there and twiddled my thumbs for, well, so to speak, for 10 minutes. So that was essentially what did happen, and I think it did go a little bit higher, as we can see. But did I really care? I was a bit blind to the markets. I couldn't see everything. I didn't have all the information available to me. So this bar looked good at the time. So yeah, it went a bit higher. But so that was me. And so I banked on that trade £285. So nothing too major, but in an hour and a half, it's good enough on that one trade. Now, if we flip this to what and what I also showed everyone, let me take this out to. Let's see if we can get this back now, because obviously I'm recording this Monday morning. What I showed people was that back on Thursday we'd done a double bottom over here. We hadn't actually penetrated to go to new lows. So I got in, I was entering on the long side over here on Friday. Over here, because we hadn't gone to new lows on the Thursday. We'd also hit support on the daily charts, in that we'd hit the daily bands, the lower bands the day before as well. So I was aware of that. So there's all these factors coming into play. So anyway, so that was what I got up to. Now, like I say, if I take you back to Friday, so there we were over there. So Tom was sort of more very, very aggressive, in and out, and fair enough. He said, I'm going to be trading this, I'm going to be scalping, I'm going to be in and out and in and out. And to be fair to him, with only 15 minutes to go, he was up about £240, and he'd been in and out on different markets, but he was going basing his profit decisions based on how much money he was up, like £30 or £50. Then he'd be like, right, bank that, that's enough. No technical analysis there as such. It was technical analysis for his entries, nothing for his exits. So how do you know what your risk to reward is? So I'll pose that one to you. Anyway. And so in and out, and he used 0 stop losses and added to his losers. So he would go in and then add to his losers. So if a trade started going against him, he would add to it. I think at that time, I remember he was in a dollar yen trade, for example. So he'd got into dollar yen back here. I remember this one somewhere. Let's say it was over here against these highs. He'd shorted, and of course it went higher and then went higher again, but he just kept on adding, and so it's things like that. And then fun enough, he also was short on the euro dollar. So when the euro dollar went up, as I was banking my half profits over here, so about 137.20 I think it was. Get this across a bit. Oops. So over here, when I was banking my half profits and then just saying, well, I'm just going to run this now and see if I can carry on, he was shorting it, and of course then it went higher and higher and higher, and so he went from £240 up to being about £600 down, and finished the contest saying, well, I'm £600 down on open, £600 or £700 down in open positions, but he'd banked 240, so he was net down 400 at the time. But he just left his positions open, and he said, I'm going to leave them open, and no stop losses, because I think it's going to roll over. And he'd been adding to these positions on the short side, so he was just basically using his account to just add and add and add, and to me, that was just like gambling. So, and I said that to Tom afterwards. So, bless him. I do like Tom, but I think he was gambling on Friday. So, it's a case of, right, I wouldn't recommend people to do what Tom was doing. He lost the competition as a result. Now, ultimately, it did come back for him about half an hour after the competition had finished. I think, or whatever it was, maybe it was an hour later, when the euro dollar came back down like this, obviously because he'd been adding into his positions, it meant that it paid out, and I think he said that he banked, I don't know, several £100. But I think it's a lesson in for one, he sat through that, and he didn't know whether he was going to be making. To me, Okay, so he ended up banking a net several £100, but that's only because he added and added it to losing trades without stop losses. To me, it's complete gambling, because what would have happened if the market had carried on going higher? He would have just ended up sitting in that, and he could have been down thousands. So I think there's a good lesson in that, and there's also a good lesson in that he was doing lots and lots of trades, and by just going in and out and in and out, just based on £30, £50 or whatever, I would have to pose a question to you: Is that a way that you think you can? Tom's a very good trader, and that he can get away with it to an extent. But like he admitted, that he does have some big losses when they don't work out for him. So I think for most traders, not using stop losses, not having proper targets, over trading, all of those things are a recipe for most traders to not be successful. So it was a very, very contrasting trade-off, but it was fascinating nevertheless to see two entirely different styles. But I was just pleased that both of us showed our styles, and that my one was just completely methodical, top-down approach. This is what I'm doing. This is how much I'm risking. And then this is how much I'm going to try and run it for, to try and get the risk reward right. And then Tom's style, which is completely different. And he did also admit that that's not what he does all of the time, to be fair to him. So he does other styles of trading as well. But certainly what he was doing there, I think, was very dangerous and effectively gambling. So it paid off ultimately for him. In the positions came back for him, but I think it's one of those things that we can all learn from, and sort of say, okay, it's probably not the best thing for the majority of people. Right, okay, so that was that. Right, I think I've covered everything off there. So right, now let's go and have a look at the daily charts and do some analysis, shall we? Now, I'm recording this at, what is the time? 9:42 a.m. I've got this on the Eurodollar. Eurodollar's got some news coming out. Now, CPI, I think it is, at 10 a.m. So in 20 minutes time. So we have got well, we'll have to see what's going to happen. If it shoots down, if it comes down to 137, then all bets are off, and this thing could be coming down. If, however, we start to break up, I think we've got 138 and 138.50 are on the cards. So that's all going to happen in 20 minutes time, which means that this will be out to you long after that news is out. So I don't know what's going to happen yet, but so far this morning it's strong. It's doing all right. It's doing well. Momentum's up. I will be looking to day trade this if it does shoot up. So I will be looking to day trade that. If it doesn't and it rolls over, I'll be probably closing out of my swing trades. Right, okay, that's pretty much that. Let's keep this very brief now, because I've realised how long I've gone on with the other stuff. The pound, okay, it's holding up here as well. We've got to keep our eye on the pound here. We've come back to retest these levels. The pound I still like. Ultimately, I'm still looking for 170, so going to be keeping my eye on the pound as well to see if I can get in on that at some point as well. Lastly, dollar yen, very, very choppy, very difficult to really ascertain what way it wants to go at the moment, so leaving it alone. But if I do see the dollar yen shooting down at some point and we get back below 102, then or certainly down into the upper 101s, then I'm really going to want to be trying to get in on that on the short side. That's me done for now. Have a great week. Back on Friday.